Okay, guys, we are going to start with lesson number 2 and the questions and stuff. I don't see Mark here, so I'm going to have to do the questions after the lesson. Yeah. If you have any questions now, maybe just write it down and we can come back to that a bit later. Okay, so the first thing with what we're doing here is when we start off trading is we need to realize that the price is always going to be king, irrespective of any of these indicators that we are using. When we are range trading, then we are looking at the normal standard classic charts because we are using the envelope and we might be using this ATR at the bottom here. And also we have the midpoint of the envelopes here, the 5-period moving average. So that is the tools that we use on the daily chart when we are looking at range trading. So we are finding our levels. Let's say that these 2 points are levels. We pull it all the way across, and then the bottom section here is a level as well. So this is the range that we are trading inside. The problem is that the market is not only ranging, the market also trends like what we see on the side here. So it's making the lower lows here and the highs are also becoming lower. So this is a trend. So when we are trending, we are using a different set of tools. You guys are now using the Heikin-Ashi. It shows us the trends easier. This is the same trend that we've seen on the daily chart here. It's just much easier. As prices are coming down on the Heikin-Ashi, it's just denoted by nice clean white candles. And then as it's going up, we have our yellow candles. All the noise is removed with the Heikin-Ashi. So it's clear to me that we're going to need a different set of tools while trading when prices are in a range. Or while prices are in a trend, we use Heikin-Ashi, and then while prices are ranging, we'll use our standard classic charts. So let me just show you what the market does. When we have a barrier like this, then it's the resistance. When we have our support barrier, then we can denote it this way. When prices gets to this level here, we call this a zone. And when prices are here, it's that zone. And with trading inside this range, we're always going to use our classic chart. And inside, once we've done our first trade, once prices comes into our level of importance and creates what we call a setup or manipulation pattern, then this is always going to be our first opportunity to trade this idea. Now, one trading idea could mean many trades added to that position, added to that trading idea until your idea is finally done. You've taken some profit off the table as prices are moving up here. So the idea is not completed until it's reached this point here. And trading inside the range using the Heikin-Ashi, after it's done this here, after your first idea, after your first entry, we are now looking for another reason to get into the trade. Yeah, that's trading here and here, irrespective of what it's doing. So what we are looking for is a nice looking set up initially here after our first one. That's going to be our second trade there. Yeah, our second position added to the first idea. This here is the Heikinashi part of it. Everything inside here is going to be made more clear with Heikinashi. And if it's not clear to you, if it's not doing what you want to do, if prices is not respecting the EMAs the way you wanted to respect the EMAs, then you leave that trade and you look for another pair. Because the price here is always the king. Yeah, the price is what dictates to us what we're going to do. The price doesn't know that the EMAs are there. So when we see prices respecting a certain EMA, and it's doing that all the time, and there's a trend line there, then we're going to assume that it's going to do that all the time. It's going to do the same sort of a pattern all the time. Yeah. Okay. Now we can start. Price is king. The EMAs and the tools are there to help guide us. Nothing more than just that. Yeah, it's guiding us. So now our first trading idea, we're going to have to take an example in history now. So our first trading idea has come. Let's say we've found our like a pattern here. It's been respected twice. This level here and this level has been respected once there, twice there, and then if we go further on in history, we see it there, and we also see prices reacting off that level. So this now becomes a level. Let's say this part of it is our history, and then prices comes into the level of importance here again, and there's an excursion beyond the mean. This happens on the 13th of December. Okay, so what we know is that we have a horizontal level of resistance. So we are trading inside a range now. So we're looking at our first idea. And our idea is to try and get all the way back to this level because we've drawn this range here. More conservatively, you're looking at that as a range. Based on that, that, and that, and that, and then there. So, but this is still to come. So our first trading idea comes off on the 13th of December. So what we do now is, even though we are looking at our standard classic chart, we can make use of our Heikinashi for confluence. Because again, here we have exactly the same thing. We have those two levels, which were 1 and 2, and we see we have all these levels now corresponding. So this becomes a strong level, yeah, based on that, and all of these points. But look at what happens on the 13th of December. The confluence is now more strong. Remember, we had an excursion beyond the mean here on our classic chart, and now we're also having a breakthrough of our 200 period moving average. So when we see this sort of confluence, then we can start looking for our first trading idea, yeah, to go short. You don't need this. This just adds confluence. So we go back to our standard chart. So this was our area. So what we would do here is then drop down to our 15-minute chart and look for a setup in this area. So at the moment, you guys know the first setup, and in the fourth lesson, we're going to show you the other entry methods. But let's say we found an entry method let's say there was just the normal divergence entry in this area and we went short. And we went short and there was profits for around 60 or 70 pips. And also I'll show you the risk management later, yeah, in the fifth lesson. But what I'm saying is we've got in on our first position here and we're looking for more because this was our first trading idea to get down to this level here, yeah, or getting down to another support level or something. But the reason we got in short was not for 20 pips here. Yeah, the reason we're always getting in for more than just 20 pips. Yeah, we're getting in for the longer term. Yeah, so this is about 200 pips, and even further down there is 280 pips. Yeah, if you're more optimistic. So you've got in on your first position there. Then what we need to do now is find out how we can get in on another position. So this is the area on the Heikinashi. So because we are already in on our classic chart on number 1, we draw some sort of a trend line or prices are moving up. And then where prices are breaking our identified line, we're dropping down to the 4-hourly chart. And then prices are breaking down. And then when you get a pullback, we are looking to pull back in and around the 36 or the 12 period moving average. And in this case, it pulls back to the trend line. And then also to add further confluence to our idea, we have a trend line coming down like this. So we would be looking for another entry in that area up there, to add to our position that we have taken up here. So remember, on our classic chart, we've taken a trade coming down and we hit whatever 60 pips and we've taken off some profit and we now want to add to our position. So we're waiting for the trend line to break and then a pullback and then looking for another opportunity short. And then we would look for another opportunity short in that area there. And as prices are making lower lows, lower than that point, we are looking to trade it short all the while until we either reach our potential targets, yeah, or we get stopped out like it does here. But we've taken our profits initially on our first idea based on our beginner strategy or classic chart entry in this area. Yeah. And then we have another one, prices goes up. So we're always starting off on this classic chart. Like where prices are at the moment, there's nothing to do. Because prices are in the middle of the two bands here. So there's really nothing to do. Yeah. Now, unless you've taken this trade based off on this level. So this here now becomes your first idea based off on that level there. And then if we pull this across here, we might get that level there. So we have at least 2 levels. And the more touches we have on these levels, the more confluence we have here, the more confident you're going to be when taking this trade. So now you have another trading idea to go short all the way back down to this level. That's your first trading idea. Yeah. And this one happens around about 26th of December. So you've got in on a trade based on this reasons here. So your first position is in the market already, or your first trading idea is in the market. Then, this was the 26th of December. Let me just have a look. Around about 31st of December, yeah. So this is the area that you've got in on, yeah? The top here. So you based it off on that idea. You've got into the market in that area. You pull the trigger short based on the beginner strategy, yeah? And then that was the daily. So what you were looking for now is a break of this trend line going up here. So, and as soon as this breaks, then you are looking for a pullback. So this here is your break. And this is a pullback. Yeah. So in this case, it pulls back much further than your 12, much further than your 36 period moving average. And again, it looks as if we are coming almost back to the level here. So in which case, for me, I wouldn't bother trading the next short here. Yeah, I would be filtered out on this one. Let me show you. Because this blue one is our 12 period moving average. The red one is our 36. So prices are coming down here. Let's say that is our EMAs. This here is our 12 period moving average. So prices are coming down, and then it comes, this is what I'm looking for, a manipulation either on the 12 or prices comes down and it pulls back to the 36, which is ideal for me, looking for the manipulation there and going short. So if it breaks all of these EMAs like it does here, then it really nullifies my idea. Yeah, unless you finding some other reason to get in here based on the beginner strategy again, if that's an excursion beyond the mean there or something, but this wouldn't be part of it. Yeah, but at least in this case, you would have you'd have your first trading idea with some profit in the bank. You would have at least, let's see if there was something, if you've managed a few pips in that area. So your second idea didn't come to fruition here. Okay, I'm going to go through more examples like this. Right. Okay. Firstly, I'm just going to go over the whole top-down approach all the way through to the break of the daily and then the pullback on the 4-hourly. That is the lesson we need to cover today. Okay, so on our weekly chart, that is how we start our top-down approach. Yeah, you guys know based on the homework how to draw all these levels and things. Yeah, and all of you have done a very good job on that. Yeah, most of you have just entered these areas perfectly. So the only other thing I'm going to help you with these levels is going to be the figure. So what we have here is our price trading at 111.79 now. And we are looking for our first level of resistance. So our first level of resistance is going to be somewhere in this area because prices has pivoted off there before. And looking to the left, we have some more touches here. Then look all the way to the right. And then we can see we are on 113.46. So in that case, we can round this off to 113.50. That is what we call the figure. It's just rounding off this to the nearest figure. Yeah. And I'm going to just write down the figure here for you on all these, for all these charts. So if we are using the euro dollar, yeah, the euro versus the dollar, maybe I think you should write this down as well. Yeah. The figure for the euro dollar is going to be the 00, the 30, the 50, the 70. Those are the figures. So if we don't know where to drop our resistance level, because we have a whole lot of nice touches here to the left and everything is looking perfect, then we can always drop our price on one of these figures here. Now the difference comes in when we have a pound, yeah, Great British Pound. The figure is going to be 00, 20, yeah, and then 50 and 80. Whenever the pound is involved, then this is usually what the figures are. Yeah. So it's just where we are dropping this. So we already have an idea. We already have an idea of basically where we would like to drop this line. Yeah, it's somewhere here. Yeah, it's somewhere there based on that pivot there. But where we would like to do it is wherever we are, just move it as close to one of those figures as you possibly can. It's going to be a 5 or 10 pip move away from where you already are. Yeah. So let's do the same for our resistance here. So this is where prices is pivoted off before. Yeah. So let's keep it close to instead of going like there, which is also possible. But because we want to, we'll get notified or we'll come to our charts sooner when it reaches here. Yeah. So let's just put it there as our first resistance, nice and close to the price. Okay, so now we've dropped it there based on a few touches to the left here. And also what we have is 110.11. So what we could do is just round that off to 110. It was about a 10 pip difference between where we originally dropped the price. So when we looked at our daily, we saw that prices are in the middle of the envelope, which means we don't really want to do anything. Yeah. So if you wanted to trade long based on a trend line or based on an excursion beyond the mean here in this area, and you really want to trade now even though prices are in the middle of the range, then it's best to follow the trend. So in this case, it's going up. For me, it's against my fundamental bias, so I wouldn't trade this. But if you have no bias and you see it's going up and it's in the middle of the range, you look here and you try and build a story around that issue. So what we have here is that trend line breaking to add to your conviction to go long. And we have this sort of a trend line going up like this. So this is what we have on our daily chart, on our weekly chart. Yeah. And then we can move or adjust our trend lines because there's an angle that's changed here. The trend is now even gone steeper. So the EMAs are here for you to be able to try and follow the EMAs as closely as possible. And because we're getting higher highs here, we have this break up there of the trend line, and then there's our pullback. And then we have another break here and a pullback. And in this case here, we have our pullback on our 12 period moving average. So you were interested in a long, so you got in back long here again. So your next trade now, if you are still long, you can move all the way up to that spot up there, which is 170 pips. What you're going to need, because you are following a trend now, is you're going to need a higher high first. And then you're going to need your pullback to come back toward your trend line here. Or you're going to need your pullback to come to the 12 period moving average or your 36 period moving average. And then you'll be looking for entries there, which would be your 12 period moving average, or there would be your 36 period moving average, which in this case is also following that. See, so inside the range, inside the area that we were looking to trade, we are using the Heikinashi as a trend trading mechanism. If the trends are not clear enough, then it is not a trend. If you're not getting, like we have here, lows and lower lows and higher, the highs here are also becoming lower, then we don't have a trend. Yeah. So if we don't get the higher high here, then that is no longer a trend. You might, in this case, want to look for your next trend line break. But the idea is that you are looking for an identifiable trend if you are trading inside the range. Okay, so back to the weekly. I'm going to clear up this. So what do we have here? Yeah. So the weekly is giving us our potential targets. It's giving us our potential areas where you would like to take a trade. And because we have all these EMAs on here, it's also giving us a potential direction. So in this case, we have a trend line that's breaking, and then we could also look for another target, which is closer to our 200 period moving average. So again, you would be using your eyes here to look at this level here. You would look at this 200 period moving average. You will add confluence wherever you can find it. Yeah. And then you will drop this. It's 114.17. So in that case, we will take it down to perhaps to 114 exactly. So that's the way it's helping us. The price is king. However, we can look at the EMAs for guidance. So do you know what the 36 period moving average is trying to do? If you can't draw a trend, then your 36 period moving average, if you're still getting your lower lows and your high points are becoming lower, and you can't draw a decent looking trend, then you can use your 36 period moving average as your dynamic trend line. In this case, if prices comes down and it's not able to retrace back to the 36 period moving average, it's only able to retrace back to the 12 period moving average, then that means we have a very volatile trend. Prices are moving down very fast here, unable to push back to the 36 like it does here. Then again, it's messing around on the 12 period moving average. And in the last step here, it's come back up. So the 12 period moving average is the fast trend. Yeah, it's a volatile trend going down. and the 36 is our ideal moving average. So we like prices to hit the 36, and if we can draw 2 touches as a minimum and draw the trend line, then that becomes very clear to us. As soon as prices are breaking and then retesting the trend line, then that there is where we start looking for our trades in that area, as it's always coming back. So I hold more weight with a static trend line, which is then accompanied by a 36 period moving average. Now I'll show you later on here that it's sometimes it is profitable to trade off the 12 period moving average, but that's going to depend all on your risk appetite. Yeah, for me it is more high risk to trade off the 12 period moving average than it is on the 36 period moving average. So on this weekly, we had a guideline as to which way prices are going. Yeah, the 200 period moving average is acting as a possible target in this case if it's broken the trend line, and then on the daily it's moving towards the trend line, so it's acting as a possible target. And then your 36 could be another possible target, yeah, in line with any other confluence that we would have. Yeah, but otherwise these lines are really invisible to us and to price doesn't really care. It's a guideline for us. Another thing that this EMAs are doing for us is when we see it spreading apart like it does here, then that is indicative of a trend coming down and spreading apart. Yeah, and then when it's interwound here, then that's indicative of a range. So when it's doing this, then it's best to start looking for your range trading on your classic chart. And when it's coming down like this, spreading wide apart, and then we could drop down based on that trend line that breaks there. You see, in this case, we have a trend line there. We're getting higher highs and higher lows. Trend line breaks. And the trend following EMA is our 36 period moving average. That also breaks right round about there. Then we get a break and a pullback. So we can constantly look for trading shorting opportunities now. And in this case, we have a volatile trend, which is only able to pull back to the 12 period moving average. Push down and 12. So the EMAs are there as a guidance for a direction that we might be going. It acts as a potential target. And also it tells us, it gives us a clue whether we are in fact trending or whether we might be entering a range. So that's all the clues that the EMAs are giving us. And the EMAs are used mostly when prices are trending. Yeah, because when we see it's ranging like this, then we immediately jumping down to look for that range more clearly on our normal classic charts, looking for that entry beyond the mean. Okay. Right, so let's take this one step further. So let's say, let's come closer to where we are. Yeah, move this. Yeah. Okay. So if we see prices are going up here, yeah, it's trending. So this is you need these 2 touches for the trend, right? So now you see it's going like this. But then here you see there's an angle change of this trend. The trend has become more volatile. So it's touching the 12 period moving average now. Yeah. So that could be a new trend line there. Yeah. So here we have a trend line breaking in this area, and it's breaking the 12, which was our trend following EMA in this case. It was volatile up until here. So that there is where we had a break of a trend line. Then we have confluence as well of a 36 period moving average. It's breaking a 36, it's breaking the 12, and it's breaking a static trend line. And that's on the 21st of January. Yeah. So you can start looking for doing shorting opportunities here after you've taken a first opportunity there. So here we've identified our trend line that's broken, and it pulls back, and this one actually pulls back perfectly to the 36 period moving average. So you'd be looking, because the 36 period is there and prices are going up, you'd be looking there for your second opportunity. Always keeping in mind that was your first opportunity based on your classic chart entry. And then as prices are coming further down now, it makes a lower low, and it pulls back. Then where would you take another chance? Again, at your 36 period moving average. Breaks back down, another chance at your 36 period moving average. So in this case, if you found entries in these areas, then that trade is 200 and odd pips there, and this one is about 200 and something pips as well. Most of them are, yeah. And then you would take another trade here based on that 36 to go short, yeah. But then depending on where your targets are, you would be stopped out. But not before you've taken at least some profits based on your first idea, your second, and your third, and your fourth. Yeah. Let me do another chart quickly. The New Zealand dollar. Because this is exactly how we're doing it. Yeah. This is an example of your 12 period moving average. So the trend line breaks on the daily, and it respects the 12 period before moving further up. And in this case, again, on the 12. So for me, because of the way I trade, I would be looking to find two spots here for a trend line. And in this case, there isn't one. Trend is going more volatile. It's on the 12. So because I am looking for this, I'm looking for the break of that trend line and then retesting the 36 period moving average. That is my style. I'm looking for my entry there. It didn't happen for me because the first opportunity comes on the 12 period moving average after the break. Yeah. Do you have any questions on that so far? On the break and the pullback? What we're looking for is a break on the daily chart. And as soon as we get a break on the daily chart, then we are going to become interested in a trade. So on the 22nd of October here, around about there, yeah. Once we see prices are breaking a trend line, and in this case, we have a nice trend line. We have lower lows. Everything is constituting a good trend. And we have a break here of the 36 period moving average as well, yeah, in this area. So once this happens, we're dropping down to the 4-hourly chart. Once you get a break of the trend line on the 4-hourly chart, 1 second. Where is that? Sorry, where was I? So this here is our break of our trend here. Yeah. This is the daily chart trend line. We've moved down to the 4-hourly chart. So this is our trend line on our coming from our daily. So we can adjust this line now. Yeah. And then the first pullback after that break has come down to the 12. So aggressive traders would look for an entry, one of the 6 entries here. And then as prices are moving higher in a trend fashion, because we need a higher high now, it's high, when prices broke the high there, then it comes back. And in this case, this is where I'm looking for my opportunity, because I like it when it comes back to the 36 instead of the 12. So I'd be looking for an entry in that area. Yeah, targeting all the way out on top here. If we take another example, like here, this is a downward example now. So we have an uptrend. Prices are breaking our trend line here. And if you adjust it properly, this is where our trend breaks. Sorry, there. Here, trend line breaks, and then it retests the 36. Always the first one where it does this, this is where I'm really interested in trading. Remember that the first opportunity was taken on the top here. That's my second. And then if I can identify some sort of a trend now, I would be trading close to, as prices comes down lower than that, it retraces to the 12 and then to the 36. And in this case, it breaks the 36, but it retests my trend line. So back interested in the trade again. And then it comes breaking down again. And in this case here, it's retesting only the 12 period moving average. So I'm not interested anymore, because I like it when it retests to the 36 like it does there. Now, the closer it gets to a potential target here, the less interested I become. So I am most interested in the first opportunity, the first break, pullback to the 36 or a trend line is where I'm most interested. And as it's getting closer and closer, my R is becoming less and less attractive now, because we're getting closer and closer to the target. My potential profits are less. So when we were here, my potential profits was 300 pips, and my stop loss was above here somewhere. Yeah, so I was, quite happy to take that trade. But then every time it gets closer to the target, the less potential we have, the less interested I become. And then we have another break here of a trend line. We can assume that this is our trend line now, because we had our angle change and it's breaking our 36 period moving average, and then it breaks through the trend line and comes back down, comes back down here and retesting the 36 just the way I like it. So there is where I would take my first opportunity to trade long. Yeah. I'm always looking for the break of the daily and the first break, pull back on the 4 hourly. So always looking at the daily for this stuff. Yeah. Like in this case here, if we next week we're going to show you trends, like the proper way to identify them. But this year is what I'm talking about. We have something that looks like a trend, but it's not a qualified trend. But it doesn't matter in this in this case. Yeah. So there we have our trend line coming down, or our trend coming down, and then it's breaking our trend in this area here. Our 36 is becoming broken as well. Yeah, it's breaking here together with our trend line. So we can draw something like this. It's broken there. Yeah. So then as soon as that happens, you're dropping down to the 4 hourly chart. And you are looking for the first break and pull back. In this case, it breaks and it pulls back to the 12 period moving average. Yeah. This is the ones that I don't like. And then the ones that I do like is when it hits the 36 period moving average. So I'd be looking for a long opportunity there. But because in this case, you can draw a trend line. Yeah, you already have this and this based on previous history. You can look for, because it's touching there and there, you can look for trades there and you can look for trades there. Yeah. It becomes more clear and nicer when it starts getting higher up here. You need the higher high and you need the pullback. So you're looking for opportunities there and you're looking for opportunities there. So if you look at this, if we are going for our 20 pip sort of moves, then this is not going to work. We are trend trading this, which means that in this area, you are really looking to go, quite high following up. So that's 300, 400 pips all the way up to there. So if you are failing at the 12, yeah, say for instance, you are a high risk trader and you found an entry here. Yeah. And you failed once and you had a stop loss of, in this case, it's 100 and odd pips. If you've taken a trade, the thing is that I didn't show you the entries yet. So, yeah, if you're taking a trade here, yeah, based on a second opportunity, then your stop loss is not going to be any smaller than roundabout below your EMAs. In this case, it's like a 92 pip stop loss. This is why I don't like taking it off the 12. I like it when it comes back further down to the 36 or when it comes back to a trend line, because then my risk to reward is much better. Looking for an entry there somewhere with a stop loss of about 50 pips, but then aiming for those 300 or 400 pip sort of moves. You see, so taking 20 pips and things, it's just not going to work with a trend trading strategy. Yeah, we are looking for those higher or bigger moves. And in this case, we can see that there was a massive move after the breaks here. So it breaks after the trend line. You're looking for long opportunities only, and that went all the way up to about 380 pips. Always looking for your first opportunity there based on your beginner strategy sort of a entry, excursion beyond the mean. So you're looking to add to your position to target these moves here at the bottom, at the top. See, this is your 300 and odd pip move. So you've taken your trade here based on your beginner strategy entry, and then you've looked to add to your position after the trend line breaks, and then where can I add? You see how clearly it becomes on the daily now? Break, and here's the pull, the break, and then it pulls back here. So your first opportunity could be somewhere in this area here to go long again. And say you've taken a trade there, it was about 100 pips move, yeah, and then it comes all the way back down based on this trend line. Now you've taken another trade in this area, and that one moved up almost 400 pips. But now this is my trend line now, and then there's a trend line that changes here, so which means that we would be waiting on this pullback. So not trading here for me because that's the 12, but I would prefer looking for the pullback to that area. And then next, just constantly doing this until it doesn't do that anymore. And once it doesn't do that anymore, we might get a break of the trend line. Yeah. And then also, if you're looking at the daily here, you might get an opportunity of an excursion beyond the mean or whatever to get in with our first position short. So if we're looking at this one, this price here had an excursion beyond the mean on the New Zealand dollar. There was a level. Don't think it hits the level properly, but then excursion beyond the mean, you want to go short, right? And then also here you found at the same time, you found prices at your 633 EMA. So a very good reason to go short. So here you don't have it, on the level exactly. Yeah, it misses the level slightly there. Yeah. But you are still looking to go short now, not only because of that excursion beyond the mean, but because also you have your 633 EMA there. Yeah. So let's say that we were looking at a trend line that has now changed. Yeah. Let me clear this. So we have a volatile trend here. It's testing the 12-period moving average. Yeah. If I zoom in, we can see here that prices has broken the 12-period moving average there. And it looks as if it's closed also there, but it's really suffering here at this end here. But you can assume that this is a volatile trend that has actually broken there. Yeah. So where could my next target be? My next target is going to be there, because you are going to also assume that there is following a trend line, and you're very close to the 36-period moving average. There is the 200-period moving average, and we have about an 80 or 90 pip distance to the target there. Yeah. So we have a trend line, a volatile trend line that seems to have been broken there, and that's all on the daily. So on the 4-hourly chart now, you were looking for the break of that trend line. And in this case here, it does come all the way up to the 36-period moving average. So you could look for an opportunity, high risk, to go short there. Remember, you've taken your first trade there, yeah, based on your excursion beyond the mean, and you were in line with your 633 EMA, yeah. Then you're trying to get back short again. Then what you need to do is find the distance here. We have about 70 pips. Yeah. So whatever your entry that you found here, you're going to have about a 35 pip stop loss to make this trade worthwhile taking. Yeah. So then you would drop down to the 15-minute and try and find some sort of an entry in that area. Yeah, you've highlighted this area here, and now you're looking for an entry. And in this case, there wasn't an entry. Yeah, because we were still waiting and looking for a stop hunt or some sort of a manipulation here first, but that didn't happen. Yeah. So what we're looking for first is our break of a trend line on the higher time frame, which is the daily. So it breaks it here and then it pulls back. And in this case, it pulls back to the 36 period moving average. But the ideal situation that when you get the break here, and let me clear up this again. When you get the break here, yeah, you're getting the break there. This move down, it's always going to be better if you at least have a pullback toward the 50% retracement of that level. This becomes just higher risk when you do it. So you can take the trade, but then take the trade on a lower risk percentage of your account. Yeah. And also the closer to the, so it breaks there. Yeah. And the closer to, we don't like it when it breaks down like this. Yeah. And then you get your 50% move up there, because it's already come down to where you would have wanted to take some profits already. Yeah. So it's better when it happens, when you have the break. Like, let me see if we have one here. Like here, that's a trend line. And then, okay, that's also a bit too far. Like this here, this is the nice one. When you have a trend line here, and then just going up and down, nice and close to the trend line. All this action nice and close. The further down this thing goes, the worse it is. Yeah, that we don't like that. This is a nice one here. There's a trend line that breaks. Sorry, am I gonna find that one? Yeah, there's a trend line that breaks here. Sorry, trend line breaks. There, it breaks there and then retests nicely to the 36 period moving average, and there. Yeah, that's where we would look for our opportunity. And in this case, we have our EMAs all in the way there, so that would be our initial target perhaps. So you need to calculate what your stop loss is going to be. And this one here is an example of where it goes, breaks far up there and it pulls back down there. So we don't really like that. But if you do take that, then your stops needs to be at the bottom there somewhere. Yeah. So it's breaks on the daily and pullbacks on the 4 hourly is what we're looking for. And this is the sort of a break pullback that we're looking for. It's like absolutely perfect there. There. Looking for our entries around about in the 36. In this case here, it breaks. And in this case, it's not a trend, but it's breaking a structure here. We are looking at this on our 36 period that is broken there. Breaks and it pulls back to the 12 here in this case. But if you look at this closely on the, we're not going to be able to go as far back as that. Okay, and in this case here, we also have a structure that has been broken here. So we can draw this structure there. And then also to confirm that break, we have the breaking of the EMAs and even the crossing over of the EMAs. But then that would be our first entries that we would have taken here. And then our second entry would have been this break of that trend line and then a retest up there. Yeah. And then that would be your second idea going short. Third idea there. Fourth idea here is where you failed. So you've taken some profits there, about 100 and odd pips, and then another idea, another 100 and few hundred pips there, and then this one also about 100, and then here is where you would have, if you've taken based on the 12, which I normally don't, yeah, I normally take the 36, but if you're aggressive, you take that one, then you would have lost that one. It went down 50 pips and then it stopped you out. But you've taken 1, 2, 3, three trades that worked out for hundreds of pips and one of them that lost, let's say 100 pips. Let's say that one lost 100 pips. So you're still netting profits there in that case. This here's an example of a trend line that breaks, but it goes very high up, pulls back there. Now, if you're taking these situations there, if you're looking for an opportunity there, you're going to have to put your stop below the 36 anyway, which means that it would have been better for you if prices had come down here and then looking for your opportunity there instead. And your stop loss is up there based on your stop loss is here, looking for that target. Always remember your target needs to be twice as much as your entry. Okay, guys, do you have any questions on that? I'm going to cover how you need to do the homework after the questions. Also, watch the other videos on this topic as well. Yes. So for now, what would be nice, Glenn, is that you find a trend line that breaks. Let's look at this one quickly. This is the daily. This is something that breaks here. Now, this isn't a trend line that breaks. It's going up, but it's not a trend because we have our EMAs that's interwinding there. So this seems to be an upward, like a wedge shaped pattern that's breaking when it does this here. Yeah. So we've taken our first shorting position here. And it breaks and it pulls back. Yeah. So what we're looking for on like the 2nd of, let me just mark this area. Yeah. March or so. Yeah. So what happened here was this was the trend line that we've identified, remember, on our daily chart. This here. This was our trend line that's broken, the wedge, the massive wedge that we've identified. So as soon as that breaks, then our second entry would be when it pulls back roundabout to the 36 period moving average. There is our first trading opportunity. Yeah. So let me see if we can get back to the 3rd of April on the 15-minute just to see if we do get an entry. Then this would be our second opportunity. So this is the first one after the break. Yeah, that is the 4th of April Let's see if we can get back as far as that quickly. Yeah. So this is where we would want to look for an entry on the 4 hourly. See, so all these areas that we found on the from the 4 hourly is now highlighted here on the 15-minute. So as prices are coming up into the level, this is where we would look for an entry. So there is no entry here. So we didn't get in, yeah? There was no divergence, and one of our other entries is just missed by a few pips here, so we didn't take that one. And then I think we've highlighted more as prices comes down. Yeah. So we're constantly looking in these highlighted areas for an entry to go back down short on the 15-minute. So in this case here, again, nothing happened on that one. We didn't get an entry. And then here we've highlighted another area. Maybe this is a divergence. Let's have a look quickly. That probably is a divergence. Let me see. Yeah, prices are going higher there, and there we have a divergence. So we'd be looking to short it in that area. Yeah. So it's all based on this now. We were looking to go short as soon as prices are following a trend. Notice what the trend is doing. The EMAs are there to guide us. Yeah. So we are looking, we could even look at this section for a shorting opportunity there. And yeah, but then as we are getting closer to our potential target, the less interested I become in the trade. I'm interested when we get our first break and pull back and it looks this good. Yeah. Then I'm putting in my entries here, and my stop loss would be somewhere up there above that. Remember, my first entry that I've taken, I'm taking off from the classic charts, and my stop losses would be somewhere up there. Somewhere up there. When I'm doing the trend trading, I'm looking to follow whatever the trend is doing. Yeah. So it's making lower lows, but where is it being respected? In this case, it's respected on the 36. So if you're putting your stop loss just above the 36 in this area, then you would have been quite safe. Yeah, looking for entries there, and that's about 300 and odd pips all the way down to this level. So if you're taking losses here because you're not getting it right up here, your targets, just always keep in mind that your targets are big. When you get it right, then you are getting it right for a much bigger profit rather than the 25 per profits. Yeah. And also we have our first entry there. Well, Dave, if you find that you like the pullbacks more on the standard charts, then you can use the standard charts. But for me, the break and the pullback, if it's clean and clear, it just adds value to that trade. Look at the white candles coming down here on the break. Let me zoom in. Look at the white candles coming down here on the break. Clean white candles and clean yellow candles. And then at the level, trading at the looking for their shorting opportunity. When you're getting candles with a whole lot of mixed colors, yeah, yellow, white, like in this case here, yellow, white, yellow, white, yellow, white, instead of just white, then the Haikanashi is even struggling to get rid of the noise, because if the Haikanashi is noisy like this, then your standard chart is going to be even worse. So I'm looking for clear cut breaks and pullbacks. There's a break up there, nice and yellow, clear, And the pullbacks are also just as clear. And in this case, it comes all the way down to the 36 period moving average. And then it does the same sort of a thing, a higher high, and respects the 36 period moving average to the pip here. And then another one. So you've got two profitable trades already, let's say there, yeah? And you're going up, and it's getting worse and worse as we're going, meaning that we're getting closer and closer, which means the risk to reward is becoming worse and worse. Then we're going, and then it breaks the trend. So we've taken profits off the table here already, yeah? We didn't do any top-down approach. We didn't do anything. All we did was follow a break pullback on one time frame, and we had two good opportunities there. So it's a daily break is what you're looking for. Let me just move this. And then a drop down to the lower time frame. Like, let's look at this part here. This is a trend line there, and it's breaking. Yeah. Let's highlight this on this is how the homework needs to be done. Yeah. So you have a trend line on the daily that's breaking. And also here, in this case, you have a 36 period moving average, and you're having a crossover. So it's breaking in this area here. Yeah. So what you're doing now is you're looking for a break pullback on the 4-hourly. And this one happens on 29th of October. Which year does it happen in? Yeah. So we have our break here. So this is what I mean about wanting it close. This is up and down there. That's what I'm looking for. And in this case, it respects the 200 period moving average, and it's more likely that there's a trend going in that fashion. So when it does this sort of a massive break there, and actually even touching a 36 and a pullback to the 12, then that is not what I'm looking for. Yeah. But it doesn't mean it doesn't work. What I want you to do is to find these breaks and pullbacks, and then just calculate the amount of pips that you would want to target off based on like your weekly time frame or so. Yeah. And then here, your second time that it breaks higher, it pulls back right on the 36. And then that's your entry there. Yeah. So your entry is around about there, and this one moves up 150 pips. Yeah. You can guide and find out what your targets could be like, or all that based on your weekly time frames. So, but what the homework is looking for a break on the daily time frame, and then the first pullback, and then you can decide for yourself whether you like the 12 or whether you like the 36. Yeah. For me personally, I like when I actually have a trend to follow that I can actually draw. Yeah. Like, for instance, a trend like this going up here. There's 1-2 touches there, and it actually goes up. And in this case, it is following the trend line is following the 12. Then I might want to take that because we have confluence of a static trend line. Yeah, so when we're looking for the pullbacks, we're looking, if you are in your plan, if you decide you're waiting on a pullback to the 36, then you look for one of our 6 entries there. So are these breaks upcoming in real time? For the homework, it's best if you do it in historically. Yeah, as much as you can. Do it as much as you can, but try and do like your zones. Like if you have, let's say, on the weekly, if you've had a like an area, just highlight a specific area there. Yeah, just so that you have some idea of what you were going to do anyway. Yeah, so in this case you were looking to buy there. You were looking to buy there. So you might need more recent history. Yeah, like maybe 2018 or so. Yeah, like then you would use maybe that there. Yeah, so you're looking to buy in this area on the 14th of of April, and then if you go to the daily, the 14th of April, yeah, then you could then say that this year was a trend line coming down. Whole lot of white candles on the 11th of June 2019. Yeah, like here we get the trend line here. So the trend comes down and it changes its angle, then it starts respecting the 36, and then you can draw 2 to 3 touches there and it actually breaks the trend line. Then you drop down to the 4 hourly chart, and then you will look for the break and a pullback, right? And then you'd look for another opportunity. And then you could just say that this is your next target up there, which is about 300 pips or so. Yeah, that is what the idea is. Or you would be looking at this as a trend line break on the daily chart. Yeah, becoming messy, now. But did you understand what I mean with the homework? It's just finding a break. If you want to do it most recent history, it's probably going to be the best. Like find the most recent downward trend or upward trend, and then like this is a messy trend, so I wouldn't even be looking at this chart now. But let's say you've identified that, and then it's a break. You're looking at on the 4 hourly chart now for the break and the pullback, and then you're looking to buy in that area. Let's see, like the pound maybe. Like here we have the most recent stuff, also a difficult chart to trade, but you have a trend line coming down. Yeah, and this here is your trend line now. Yeah, your trend line is breaking roundabout in that area on the daily. This is the 4th of September on the daily. 4th of September. Here we go. Yeah. So prices are now breaking your trend line up here. And in this case, it comes down, touches the 36 perfectly. And then that's my first entry there. Yeah. And then you can identify if you want the second time prices goes higher and comes back down to the 36. So in this case, you're getting a whole lot of good opportunities there. Yeah. It's respecting a trend line and the 36. So you've taken your first trade here based on your beginner strategy stuff, and now you're looking for another opportunity. So obviously you're in this trade, and now prices are pulling back against you, and now you're looking for another opportunity there, and you're looking for another opportunity there. It's only zones. This whole thing is trying to find a zone where you would like to add to your original position, which is here. Okay. So we always starting our first idea when prices are getting here. This is what we are always doing, looking for number one. So we are in long. So now we're looking for the break of this trend line on the higher time frame. There it breaks there, and then the pullback on the 4-hourly, and you are just trying to identify if that is going to turn out to be a trend. So it could turn out to be a range in this area. We don't know. Yeah. If it turns out to be a range like this, and then you could wait for the break of that range again to add to your position to go long. But it's everything is based off on your first idea here. And this one coming down long, short here, it's based off on that being your first idea targeting this. So at the moment there, we would wait for prices to reach the top here and then go short and then look for the break of the trend to add more to the idea. Okay, is that clear, guys? You can ask any questions about this. I want this homework to be clear to you. And it will become more clear if we talk about it as you're doing it. Now we're going to talk about it, Glenn, the same way we did the homework before. I think we did ours yesterday. So you do it with me, yeah? You show me what you are doing, where your targets are, and where prices are breaking or whatever. And then the next lesson is going to be identifying a proper trend line. For now, I'm accepting anything that looks like a trend. That is a trend line there. And then this here is my first break, and it pulls back. So you're looking for this. Now, it's much more clear on the Heikinashi. Yeah. And then here it turns out to be a rangy sort of situation again. So here you're looking for that there. Yeah. As the break, breaking that and pulling back on the lower time frame and looking to go. Everything based off on the idea that you went long there and that you're looking for more. You're looking to add some more. Okay, guys, if there aren't any further questions on that, then I'm going to call it a day on that one. Yeah. Okay, now thanks for joining. Yeah. And Justin also knows a lot about how this thing works. You can ask him, and obviously Mark as well. Thanks, Mayo. Okay, guys, thanks a lot for joining, and I'll see you in the trading room in our Discord.